God damn it, an entire generation pumping gas, waiting tables, slaves with white collars. Advertising has us chasing cars and clothes, working jobs we hate so we can buy shit we don't need. We're the middle children of history, man. No purpose or place. We have no great war. Our great war is a spiritual war. Our Great Depression is our lives. We've all been raised on television to believe that one day we'd all be millionaires and movie gods and rock stars, but we won't. We're slowly learning that fact. I'm very, very pissed off.
Welcome to Market Makers, everybody. Your home for tomorrow's TA today. Often imitate it, never replicate it. Lots going on in the geoeconomic space, geopolitical economics. If you guys have been watching YouTube, and certainly if you've been watching the business news, everybody's talking about tariffs. I want to give you the historical perspective on tariffs because this is fact-based, okay? This is an opinion. So there's a lot of conjecture. Are tariffs inflationary? You see gold bugs on YouTube who sell gold, who want you to buy gold, telling you tariffs are a horrible thing. Prices will rise. They're inflationary. It's going to help bring in the wave of hyperinflation into the marketplace. And then you see people on Bloomberg, CNBC, the business news come out and say tariffs are bad. We want to have free trade. Well, let's talk about why we're even looking at tariffs. They're a negotiation tool, just like you saw Trump use them with Canada and Mexico. If you don't do X, we're going to put 25% tariffs on certain goods. And what happened? Well, the whole hubbub lasted about 48 or 72 hours. Both countries capitulated. Mexico sent 10,000 troops to the border, cracked down on fentanyl. Guys, we have 100,000 people a year dying of fentanyl overdoses in this country. 90+% of it, which is coming in through the Mexican border. Just to put that in perspective, roughly around 3,000 plus people died on 9/11. That's 3 9/11s a month that we're suffering in the country from people being killed with fentanyl. And oftentimes it's not the actual fentanyl that they're doing. It's just laced in the other drugs. It might be laced in the marijuana. It might be laced in the cocaine. And actually my daughter in high school had 2 students at her high school that died from a fentanyl overdose, even though they didn't know they were taking fentanyl. They thought they were taking something else. In one case, it was just laced in the marijuana. So this is something that had to happen. Now let's talk about, that's the moral side of it, right? But let's talk about tariffs as an inflationary tool. What are tariffs? Tariffs are taxes. They're consumption taxes, which is the best kind of tax. The problem that I have with most of YouTube is none of them have read anything about economics, particularly Austrian economics. They're all Keynesian. They're all John Maynard Keynesians. That's all they are, is government intervention. Everybody repeats everything that they hear on the business news, and they just keep saying the same thing. Tariffs are bad. Why are tariffs bad? Well, let's look back historically. I saw a guy on Bloomberg just last week say, well, we have an example set of one, and they're not inflationary, but we only have one example set. And that was from Trump's first term when he put tariffs on Europe and on China. It wasn't inflationary. Yeah, no shit. We know it wasn't inflationary, but we have a lot more than a sample set of one. Go back to 1921, 1922. The McCumber tariffs came in. The average tariff was 40%, and it went up to 400%. What was the point of those tariffs? Those tariffs, which were called scientific tariffs, because what they did was anything that was made outside the U.S., they brought the price level up so that the U.S. price level was the same or cheaper. It incentivized people to make products here and also to buy American. What was the result of that? The McCumber tariffs. Well, that was the roaring 1920s. What did the stock market do? The stock market went up 400% in 7 years. The roaring 20s. What did inflation do? Inflation never got above 2.3% for the whole decade. Okay. So that was the McCumber tariffs, the Ford-McCumber tariffs that came into the marketplace. But the tariff set that all of the morons on YouTube and on the business news want to talk about is the Smoot-Hawley tariffs. And they say, look, the Smoot-Hawley tariffs caused the Great Depression. That's what caused the Great Depression. That's why tariffs are bad, and everybody keeps repeating the same narrative over and over without ever just opening up a history book or looking at the market charts from the time frame. When did the crash of 1929 occur? The market broke in September of 1929. When did the Smoot-Hawley tariffs go into effect? When were they implemented? They were implemented in June 1930. Do you know how much the market had already crashed by June 1930? The market was down 50% by June 1930. Massive deflationary event. Unemployment was spiking, okay? It had nothing to do with the Smoot-Hawley tariffs, which again are what? They're taxes. It had nothing to do with that. The economic depression was well underway. You can debate whether it hurt or hampered the recovery in the Great Depression, but this is what ushered in Roosevelt. This is what ushered in John Maynard Keynes with Keynesian economics, which is all about government intervention, government giving out money. But in fact, in reality, how was the bubble caused? What was the crash reason? It was due to the Fed, as it always is. There's been about, 24 books written on every single crash that was induced by the Fed and stock market history. That's a whole nother video we can go into one time. I just want you guys to understand, it had nothing to do with the tariffs. One of the most prosperous decades in American history had the highest tariffs that we have ever seen. And again, it's about financial behavior, incentivizing companies to produce products here, as well as penalizing companies that use things like, slave labor in China to make products, and then it takes away jobs from Americans. So if capitalism, what you're led to believe watching TV and listening to some of these morons on YouTube is that capitalism is, oh, you know what? Our country will go into $36 trillion in debt, and we'll have 12-year-old children build iPhones in China. That's capitalism? That's not capitalism. And then what does Apple do with that money, by the way? They have billions and billions of dollars sitting particularly in Ireland, but offshore, to not bring it back in and pay taxes. All of our policies through both Democrats and Republicans over the last 30 years have made wealthy some of the most morally corrupt and evil countries in the world, okay? That's what these policies have done. Protectionism policies will enrich Americans, provide jobs, provide fair wages, and what does that do for the average household? Raises the standard of living, okay? So I'm all for tariffs in that sense because, again, they're consumption taxes. It's not just taxing everybody. It's saying, hey, if you want to buy this car from this country that's made in a country that hates us, that's made in a country that uses slave labor, you're going to pay a higher price because we're not going to fire people in America just so you can buy that car. And that's what's happening right now with the discussion. So tariffs are being used as negotiation points, right? And then you have reciprocal tariffs, which is what Trump's looking at with Europe right now. What's a reciprocal tariff? Well, if you have a car that America sells into Europe and they tax it with a tariff of 10%, I drive Mercedes. But if we only tax Mercedes and BMW and other cars coming in from Europe at 2.5%, Trump says we're going to raise the tariff or lower your tariff, but we're going to have an equal playing field. It has to be equal. That's free market, is when everything is equal, not when you use children to make products and then hide your money offshore, and not when you give us a larger fee, a larger tax for selling you our products than we give you for receiving your products. Okay, that's all this debate is about. And it's just really silly and stupid because the average person on TV doesn't seem to understand what's actually happening. Now, I think what Trump is doing here out of his playbook, I think he's basically running the Reagan playbook. The first 2 years of Ronald Reagan, he inherited the Jimmy Carter economy, which was what? Stagflation, massive stagflation, the whole 1970s. And that was the end with Carter. Reagan comes in. So what does he do? He has Volcker raise rates to 20%. Reagan deregulated deregulated, passed all the deregulations, cut taxes, did a pro-growth initiative, so that what happened the first 2 years? You got a recession, and then the economic boom started the second 2 years. And then what happened with Ronald Reagan? A landslide re-election victory, which I think he won, 49 states? 49 states. Okay. So I think that's the exact same policy that Trump's doing, even though Trump's not going to be running again. The next iteration, whether it's Vance or whether it's somebody else that runs on a Republican ticket, is set the stage vis-a-vis tariffs, vis-a-vis deregulation, vis-a-vis cutting taxes. This is why you're seeing the flurry of all the economic stuff coming out of the White House. Everything with negotiation trade deals. They want to get everything set. And I think this is because Trump has very smart people around him, including Scott Bessent, who's a billionaire trader. Okay. He's the head of the Treasury. I think they all know what's on the horizon, which is a recession. It's unavoidable. So set the stage for pro-growth, fair trade deals, equal playing field, so that the recovery can be both sharp and it can be magnificent. And that's what's going to keep the party in power, okay? Because the drawdown is inevitable where we're at in the marketplace. You guys all know that. We're going to look at the charts and go over all this. I had to go off on a rant about tariffs because I'm so tired of hearing everybody say the same two talking points over and over again that don't even understand what tariffs are or how they've been used historically and what prosperity that's brought the country historically. So without further ado, Lee, let's go ahead and start the show. All right, guys, if you'd like to join our fantastic Market Makers Discord community, join right through our website, marketmakers.trade. You can join right through the website. Your first week, as always, is free. Hope to see you guys there. I'll pin this in the YouTube comments as well as the video description, and support the channel. If you like the content and you want to trade, check out Bitunix, check out SimpleFX. Both of those are exchanges that help sponsor the channel. I'll pin their information in the YouTube comments and the video description. If you don't want to trade anything, guys, but you enjoy the content, then definitely like and subscribe. Anything helps support the channel. Where are we in fear and greed? We're back in neutral, guys. As you guys know, I believe we still have higher prices ahead. I think the market top's going to end in greed or extreme greed, not in fear and not in neutral. You're in a range. You're in a trading range. We've been talking about the trading range, and that's what happens in fear and neutral. But I think this market will begin its big correction after it's in greed or extreme greed. Let's look at the VIX. You're suppressed, 1606, back below the 50, giving you rally conditions. Let's look at the 10-year. You're back at 4.45%, giving you the conditions for yet again a rally. Let's look at the S&P 500. What key events do we have coming up for the next pivot? Well, February 12th is a lunar cycle change, and it also is when the CPI comes out. And guess what? The year-over-year numbers are supposed to be slightly cooler for this print, which could be a catalyst to rally, okay? As you guys know, I'm looking for a market top in mid-March to late March, and I think we're going to have catalysts up and down between now and then, but you're going sideways, right? I see a lot of people are very bearish still in the market. A lot of people are just super mega bullish. I think we're coming up for a top. I think that top is in the range of 63.22 on S&P futures out to 64.50 on S&P futures. And I think we're going to get there mid to late March. Okay. That's what I'm looking for. We're going to have catalysts come into play, such as the CPI. That's next on Wednesday. You can look for the S&P. If it comes in cooler, look for the S&P to start trying to form some type of rally. What's going to happen if it comes in hotter? It's going to sell off more. Why? The answer to why will it go up or why will it go down has to do with market psychology. The market needs hopium where the prices are in the market. The hopium is the Fed's going to consider cutting. Why would the Fed consider cutting? if inflation is coming down. So you have to have the sales reps on TV, keep the lemmings in the market as long as possible. You got to have that hopium to sell them, okay? So what we're doing here, playing 3D chess, you know everybody's going to be excited if it ticks down 0.1% on the inflation. So we're looking for this to move up. And guys, a lot of people are asking me, how come I'm not talking about the crash, the big deflationary bust? Because I've said this many times now already. What has to happen is we get our top, okay? We get our top, we start to correct, we go down 10%. The rally back up after the 10% correction will determine if it's a dead cat bounce and it's the market top, or if we're going back up to new all-time highs once again. You get the correction before the crash, in other words. Does that make sense? You have to go down 10%, get your correction. It's all about the recovery after that 10% drop in S&P futures. If you don't make a new all-time high, that could very well be the market top. Much lower prices coming soon to a theater near you. However, you take out the all-time high, guess what? You're not done inflating the bubble, okay? So what we're doing is looking for our top, looking for that big trade, capturing that 10 to 13% down move, and then seeing what happens towards the bottom. That's how I'm playing this anyways, right? So those are the next key pivots, key price levels, 63.22, 64.50. We're looking for that move up. CPI is Wednesday. Pay attention to that, guys. Let's look at the indicators really quick. We're still in bullish territory, cooling off some. Volume still good, still accumulation here in the range. I still think this is going up, guys. We're going to be chopping sideways. The level you want to hold is your new fractal low at 59.35. You're at 6,081. And the level you don't want to lose is a 58.09, which was your big sell-off, right, that we traded, right? So again, this is still bullish accumulation until it breaks down, loses 59.35, loses 58.09. Until then, it's bullish and it's moving up, it's spiraling, it's coiling, it's building energy. It needs a catalyst in the market to move the price up. What does this mean for SPY? Key resistance still 609, guys. And then I have 636, 641 is the next stopping point for SPY. So you want to hold 590.49. Hold 590.49. You're at 604. And then look for SPY, cooler inflation print. See if you can flip 609, hold it as support, and start moving up to those targets of 636, 641. What about NASDAQ futures? 21,850 right now as I'm recording. I'm looking for 23,226 on NASDAQ futures. You're in an accumulation range of 22,152 down to 21K. So stay above 21K. Inflation comes in hot. You don't want to make a new fractal low and start descending, right? You need to flip 22,152, get on top of it, start moving up to 23,226. Overall, guys, all the markets look the same. I draw this all the time, but you're just spiraling. You're in a defined trading range, at which point you can short the tops, buy lows, however you like to trade, or just wait for a bigger trade, a bigger swing to develop, which is what I'm doing. Looking at this on the next set here on the triple Qs, what does that mean? You got to get above 539. Triple Qs, I have 553 out to 562 as my primary targets for the triple Qs to come up to this level. So we'll see. And you want to hold above 503. You're at 529. So again, you're kind of not mid-range, more towards the upper range here because you want to get above 539. But this is just going to follow what the markets do. We're going to look at some of the individual assets such as NVIDIA, such as some of the mega cap tech, because they're either rebounding or catching a bid again. And again, with low inflation, if that's what happens, you get a cooler inflation print. Watch for all of this to move back to the upside. What about the Chinese market? Chinese market, build our nice W pattern, sold off, trying to hold a higher low, right? Remember, it's just basic TA. You can watch anybody on YouTube do this. Basic TA of higher lows, seeing if you can hold this range, but you got to get above 22,798 here on HSI to break out of this range and the recovery, okay? That's what you want to see. Or you're going to fail and fall back down into it. What about the German market? 22,011. You've been stuck here at 22K. German market, DAX. Germany's been in a recession basically off and on for 2 years now, but the market's catching a bid. Why? Because it was undervalued, is how Wall Street's viewing it. So it's been catching a bid. My next key level I'm looking at is 22,400. You're at 22K. So we'll see what happens with if CPI comes in cooler on Wednesday. Let's see if you catch a bid here in the German market as well, or if you start making a bearish pattern here on the DAX, some type of double top or some series of lower highs that start breaking down with lower lows. Okay, so we want to watch this. I'm in between fib levels here on my German market, on my DAX. So I'm just watching to see how it's developed, see what patterns present themselves. What about Stocks 50? This is the European blue chips. Same situation, guys. You got above 52.70. I'm looking at 54.81. You're at 53.73. 54.81. If this thing can keep moving, look at this long accumulation from April of 2024 until you actually broke out, really just about January of 2025, right? Very long accumulation, range trading, pivot lows, pivot highs, higher low series, boom, breakout to the upside. 54.81. You'll see that in confluence with the US markets if they do indeed break out. What about gold? Gold had its nice breakout of its triangle, nice diamond pattern breakout. My target's been the same for quite some time, 29.46. You're at 2,900. Let's see if you run into some resistance. Like I've been saying, if you get to 29.50, you got to assume you're going to get to 3,000. Key psychological number there on gold. So just watch gold. If you own gold, physical gold like I do, then it's a very nice thing to be owning right now. Looking at Bitcoin, 3 peaks, domed house, still chopping sideways. I don't want to spend too much time on this, but our levels to watch, once again, are the 108, 115, 130. We look at this on the daily time frame. See lots of people super bullish on Bitcoin, lots of people super bearish. Again, guys, I have higher level targets. Tomorrow is a key, or Wednesday is a key pivot. Watch and see if we start accelerating Wednesday. You've basically been going sideways in this trading range for just about 80 days now. Come Wednesday, it'll be 82 days. So I think, Fibonacci number being 89, you're getting close to the point where you're going to make a decision, I think, and start moving to the upside. That's what I want to see happen because I have those Bitcoin targets, 115 all the way out to 130, okay? And I'm looking for, personally, 120 to 130 on Bitcoin. If we look at this, fractal high down to that fractal low, 200% gives us 127, 1618 at 120, okay? So that's what I want to see is these higher level targets. And until then, I don't see anything bearish about this. This is holding 92K. You're catching pivot lows below 92K, right? Shakeout candles. You're just moving sideways in a coil. I don't see a bias yet, right? Your bias will be determined vis-a-vis a breakout or a breakdown. Now, my personal bias is upside because I'm also trading this with a cycle and in confluence with the markets, which I believe have higher level targets, hence upside bias. But just if you were an alien that landed here looking at this chart, you don't have a bias. You're going sideways, okay? You're going sideways. You made a high, you made some lower lows, then you made higher lows, and then you made higher high, and now you made higher lows. So again, to me, the bias, knowing that this has been pushing upwards, knowing where the M2 money supply is, how it's been increasing again since 2022, I think the bias is higher Bitcoin prices. I don't think the market ends in neutral. I think you're going to end in greed or extreme greed for a big catalyst for a retracement when the market sells off. You'd be looking at a 30 to 40% Bitcoin drop after we get to these higher level targets, okay? So let's go ahead and move forward. XRP, looking at some of the altcoins here. Again, range trading. Where'd you go back into? You went back into level 1. You want to get back into level 2 up here. You are currently in level 1, which means you got to flip $2.65 and you got to flip $2.91 to come back up to this level. You're at 242. You're just going sideways. You're not going to do much until Bitcoin moves, okay? And notice most of the alts made this exact same pattern. Spike down, bought back up and going sideways, right? Just tightening and volatility, range trading. You're going to see this pattern all over. Solana went up. We had a new all-time high above 290, obviously. We're holding 188 very well. We're at 203. You get some spike lows down here as well, 166 down to 175. So watch Solana, but you did a level change, right? Your first level was down here. and you're still on the second level. Most of the altcoins return back to the first level. So hold 188, try to hold these fractal lows here if there is any more selling pressure, 175, 166, and you're going to keep going sideways when Bitcoin makes its move. If it is to the upside and I'm correct, you're going to see the altcoins move as well. It's as simple as that. Ethereum, because you guys keep beating me up asking for Ethereum, okay? Let's just look at Ethereum, what we've done here. Going back to, what date is this? This is August 2024. Throw this in this range here. Range trading here from August 2024 all the way to November of 2024. You got back above it, and look at this. Look at where your demand was, right back at the bottom of these fractals, okay? See that 2100 level? That's where you got bought back up. There's that spike down, the same pattern that you see on all these alts like DOGE, like XRP. You see it on Ethereum too. You have to spike down, buying pressure, and then you're back up. But again, guys, when you just look at this as a level perspective, where are you, right? Where are you in the level? Well, I'm just going to draw up the rectangle because you already see it. If this is level 1, which goes back to 2024, August of 2024, you broke out above it. You made some bearish patterns. You made lower highs, deeper lows, double tops. You've capitulated. You're back where you started. Okay. And you're going to see this across the board with a lot of the alts. You need a spiral. You need to coil, build up energy, get higher lows. Same thing over here, and then break back out to the upside. You got to get back above 2,800, right? Get above 2,800. You can start looking at these higher level targets again. And you won't see this until you see Bitcoin break to the upside, which is why I don't cover a bunch of alts, because they just follow Bitcoin. So I just try to cover a couple that I think are making interesting patterns or whatnot. But you want to get above 3,300, 3,677. That's a 618 and a 786. Once you start getting the breakout momentum to return with Bitcoin, okay? Looking at Doge, again, exact same pattern, guys. Spike down, buying pressure, sideways, okay? All of them had the exact same pattern. So Doge fell apart, bearish W pattern. You're below 26 cents. You're at 25. Again, you got to come back into this trading range to really make some progress here. And you're not going to do that until when? Let's go ahead and move this to the new low. You're not going to do that until Bitcoin moves, okay? So again, I would want to see Doge get back above 26 cents, and then you got to start flipping these levels. So right now you're accumulating, you're going sideways, and I guess people probably looking at this stuff as to whether or not to accumulate in these ranges. It depends on your Bitcoin TA. If you think Bitcoin is going up more, then yeah, you start looking at these ranges, because you got a fractal low here of 23 cents, right? It's a very tight range. And then you have that deeper sell-off low down here of 20 cents. So you can look at these as accumulation ranges on Doge if you think Bitcoin's going up, which therefore would mean many of the alts would go up as well. Okay. That's just going to depend on your TA. Meta, big breakout. 732 is a target I'm looking for still. You're at 714, got to 725. We'll see if Meta can get up to that level. Obviously, if the markets have higher legs to go, which I believe they do, then the best performers such as Meta, you're going to probably get a pullback at some point, but best performers should still perform, right? Because something has to carry the market up. Look at NVIDIA, after 26% sell-off, you're right back in your trading range of 134, right? Your all-time high up there just above 150. And you're back in your trading range down here at 134. So we'll see if this bid can stay. This is going to help lift the tech sector, lift the markets. And if you're going to just chop in here like you did for a very long time, or are you going to start making something like a thrust up, pull back, maybe make a W reversal, and try to actually break out and carry these markets to the next leg prior to the correction? Be interesting to see. Let's get some overhead resistance here on the video based off fibs. 618 at 137, 786 at 144. NVIDIA is 134. Amazon pulled back, right? Broke out, flag pattern, broke out, pulled back. So your next move is just to try to hold here or way back up. A lot of it's going to be the CPI print on Wednesday. Lower inflation. I think you're going to see money flow back into tech. 231 is the 1618. You're at 232. You got as high as whatever, 242. My next level up there is 250. So you'll see if you can hold this level, right? See if you can hold this level, chop around and start getting some higher lows and coming out to the upside. Tesla. So Tesla came down all the way down to, what's the low here? 350. So I was looking for Tesla to hold these fractal lows here up into low 370s, 360s. It came down to this next trading range, but it ended up right in the reversal area of the 618, 786, right? 618, 786. This is where you ended up. We'll see if Tesla can hold this range, bang around. Ultimately, when you see a steep decline like this, you get a rebound, right? Even if it is to a lower high, because at a bare minimum, you'll get some type of M top at a bare minimum, right? This is when you bounce back up to the 618, 786. And then even if it's still bearish, it rolls over from that point. So you get a sharp move down, rebound back up. Just common ABC pattern, three-way pattern, AKA a double top. So we'll see if this support level holds, if Tesla comes back up for that move. And again, if we have higher leg in the markets, can easily get a lower high. And obviously, euphoria comes back to Tesla, you can get some of those higher high levels, which if we just take the fractal high down to your current low, looking at 526, 573, if Tesla was to build some serious energy and euphoria and excitement. And I know all of you have been excited watching this video. Guys, I hope everybody has a fantastic trading week. Follow me on X. Check out our Discord, and I'll see you guys on the next video. Take care, everybody.